Hello there, Maverick traders. Here we are in the last trading week of August, and it's been a pretty decent month. I gotta say, I typically dislike August trading, but this August has been good. That's why you always gotta show up, because sometimes the cyclical patterns don't repeat themselves. Let's jump into it. In this session, we're going to be going over the news of the week, what happened. We'll take a look at all the currencies, score them from +3 to -3. And then you know what we do. We pair the strong against the weak. Those are our currency pairs where we are hunting actively for trades.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
All right, let's start off first with the equity markets. We saw the equity markets continue to churn higher. So we basically had 4 up days and 1 nasty down day on Thursday. But at the end of the week, we had climbed a little bit higher. We're getting closer and closer to those all-time highs. We saw the dollar have the biggest loss. We talked about wanting to be short dollar, and it was a good call on short dollar. We had a lot of traders hitting short dollar trades all week, so great job. And when the dollar goes down, we see gold, inversely correlated gold, making new record highs. And then on Friday, we heard some big news out of Chairman Powell of the FOMC. At the Jackson Hole Symposium, he said that the time has come. Now, they've hinted at it, they've talked about it, but they have never been this blatant. The time has come, meaning there will be rate cuts. Let's see what the market is pricing in. If you don't know what this is the FedWatch tool on the CME Group website. So just type in FedWatch tool CME into Google and follow the links. It'll get you here. And basically what this is saying is, what are the odds? So this is up here, the next meeting, September 18th. And right now interest rates are at 425 by 550. You can see there is no chance. There's no bar over here saying that they're going to stay. 100% chance that there's going to be a rate cut priced in the market. Now there's a 61.5% chance it's only a quarter point, and the market is pricing in a 38.5% chance for a half a point. Okay, if we go to the November meeting, we can see that there was already that rate cut that happened, but look at where the market is pricing in. They're pricing in a almost 50% chance of a 0.5% basis cut in the November meeting. Now, this surprises me quite a bit. And then if we go to December, they're pricing in another 0.25%. So they are pricing in basically 100 basis points or a full percent in rate cuts by the end of this year. I personally think the market is a little too aggressive on this. Ankit, what do you think?
Yeah, absolutely. I mean, this kind of reminds me of this beginning of 2024 because, that's the point where markets are expecting 4 rate cuts, I think. And, market always seems to get ahead of itself. And as the numbers didn't meet expectation when we saw that big flip, it's kind of reminding you of the exact same thing. More people are getting ahead of itself. And again, keeping in mind it's election year. And here we are expecting rate cuts very aggressively here. So I think this is where markets are just getting of itself. But that's what market does. And in the next few weeks, when things don't meet the expectation, we can totally see that revert back as well. So I think data from here on is very important because that's just going to drive a lot of these moves here because that will just indicate, how aggressive the rate cuts can be or how little aggressive the rate cuts can be. So I think it's going to be a volatile situation from here on.
This right here is the primary reason the dollar had such a big down week because of people's expectations of these aggressive rate cuts. The dollar is going to stay weak until people no longer believe these rate cuts. And that's where Ankit said it's going to be very important for the data. If we get stronger than expected data, that's really going to help this dollar bounce back up. But for the time being, we got to stay short dollar. And speaking of economic reports, let's go and see what happened this week. We had CPI out of Canada, weaker than expected. Now look, the CAD's already been weak. This kind of news is not helping the Canadian dollar go up. This is just more of a reason to be short Canadian dollar. We heard from the FOMC minutes. They basically came out and said what Powell said, so there's really not much of a move here. We had manufacturing out of the UK and out of Europe. It was okay. It was okay, a little bit weak here, a little bit strong here, but nothing to really get too concerned about. And then on Friday, we did have a better than expected Canadian retail sales, at least the core. The headline number was as expected. So big news out of Canada, basically saying that things are a little bit weaker there than everywhere else. Europe is stronger, at least as far as economic numbers go, that we had this week. So let's take a look at what actually happened last week in relation to that news. Taking a look at equities, we had a 1% move. So 1% move higher. Like I said earlier, it was 4 days up and then one big day down. Crypto had a nice bounce back. I've been talking about Bitcoin for the last week or two. We'll take a look at that. Gold, back up to those all-time highs, looking really strong, and oil down just a little bit. Let's focus on this S&P chart. So this is U.S. equities. And look, I just want to point out this week, this is typical August trading. This is very, very typical August trading. This has not been typical August trading. Typical August trading has been a slow grind higher, just very small candles, a slow grind higher, and then you get these one-day plummets. And then you get like 4 or 5 more, just slow grind higher day, and then a one-day plummet. But as you can see, it's still going up. It's still going up. It's just really rocky. And these are difficult markets because these big red candles can tend to stop out a lot of people who are long, and then the market continues the next day and just marches higher. We would expect there to be this kind of price action at this pretty big resistance level. The longer we base here, the more convinced I am that we are going to be breaking out to new highs in equities. So I think we are probably sideways here for a week, maybe 2 weeks. I think the next move is higher in equities. Anka, do you agree with that?
I mean, I definitely agree. I think where we are in the market, and this is a massive recovery. And here's what I think. I think the market rally likely to broaden here. So we'll probably see small caps and other things that start to pick up a little bit more, similar to what we had, earlier in the 3-4 weeks ago, where we had that rotation. I see that coming in a little bit more, where the market rally broaden here. But as far as the market sentiment goes, I don't see a lot of reasons to be bearish here. I mean, I know this whole thing started with recession fears, but I don't, they're all put behind us. And even though, we're cutting rates, and there's always a reason why we're cutting rates, it doesn't seem like markets are concerned about why they're cutting rates. So on, probably stay good until we see a bit of a check in the markets.
And later in this session, I want to talk about the September 1st to October 15th period. Well, let's just talk about it right now. It's the weakest period of all existence. As far as when you measure what's the weakest period in the stock market every year, it's September 1st to October 15th. Every year, right around this time, I start hammering the table saying, hey, everybody, be cautious. Don't get too bullish. We're going into this period of time where typically we have a big fall. I'm still out here pounding the table, but over the last 3 years, I've been very confident that we were going to get that fall. And guess what? We got it exactly almost to the day for the last 3 years. Go pull up a chart and you'll see just it's perfect. September 1st, October 15th, and then it rebounds off of that. I don't think that's going to happen this year. I actually do not think that's going to happen this year. Presidential years are very unlikely to see that because there's a ton of spending going on right now with the elections, and that's likely going to keep anyone from really freaking out about economic growth. All right, let's take a look at this real quick. As you can see, the dollar was the worst currency, down 2%. That's a big move in the dollar. Kiwi, we've been talking about that. It didn't make a new low. It made higher highs. It was a really nice performer, but we also like the pound and the Aussie. They did okay. They did okay. I want to point out yen. Now, I had a couple of emails over the week saying, Rob, short yen, are you jumping on short yen? And I said, no. The yen is still showing strength. As long as the yen is still showing strength, I don't want to short it. I want to be in dollar short and CAD short, and that was the right place to be. So when we look at the chart, you're going to see the same thing this week. The yen is not acting weak. It's acting strong, and that tells me it's likely going higher. As far as crypto goes, Bitcoin. We talked about Bitcoin being the strongest. We talked about how Ethereum was definitely underperforming and how Litecoin, that went up last week when cryptos went down this week when cryptos went up. It's being negatively correlated right now. So let's take a look at some other markets here to really get a full picture of what's going on. This is U.S. interest rates. As you can see here, we are just drifting lower here. So U.S. interest rates are drifting lower. I doubt we get below this panic low. This was the low set on that Sunday night when the market freaked out. I've been saying for a while, 370 to 4. This is a really good spot for bonds. If it stays in this area, the dollar likely continues to weaken. Not at the pace it did this week. Remember, we got new information and those expectations for interest rates, they jumped. So everything had to be repriced. Now it's repriced. It's going to be a slower drift down in dollar until we get data that says that maybe we're a little bit too aggressive on those rate cuts. Here's the crypto basket, and I don't really care about the crypto basket at this point. I just want to look at individual cryptos. But you can see here, crypto basket is starting to push up on the top of that base. Overall, moderately bullish here on crypto. Next week, we do not have a ton of data. We are the last week of August, not a lot of data. We just had a big move this week. This is setting up for a really boring week. I'm open to it being a better week than I expect, but looking at this, I think this is a great week to go on vacation, to be honest with you. I think there's not going to be any great trading opportunities. If you want to maybe try to time some trades, say where's there actually going to be some movement, Aussie CPI on Tuesday night. I think that's a really good report to be in some Aussie pairs, long or short based on that report. There should be a nice move off of that. Whether it's up or down, I don't know. We'll take a look at the charts before. And then I think you can also take a look at Friday. Friday should be an interesting day. We have Canadian GDP and we have another reading of inflation, the core PCE price index. I think those reports are probably going to be the best opportunities. Now, I know a lot of you don't like to trade news. If you don't love to trade news, I think this is a great week to go on vacation or to just try to trade less. If you're looking for some things, some spots that are going to be moving, where you know there's going to be movement, Tuesday night on Aussie trades, and then Friday morning are likely going to be the best times of the week to trade. Let's go in and score the currencies. I'm going to do cryptos. Alka's going to do Forex. You guys know, if you've been listening to me at all over the last 2 weeks, you know I'm going to spend all the time here on Bitcoin, and then I'm going to race through all the other three and say, just ignore them. And you'll see why. This chart is starting to look promising. I've been talking about how we've been in this base, but until we start to push up at the top of that base and things start to turn around, I'm not interested. Well, guess what? All the things I said I wanted to see, I'm starting to see. Now, we are still at a +1. I need a little bit more of a breakout, but I think we easily could have a nice run, at least up to the 68,000 area. So that's a decent size run. That's about a 10% move here in Bitcoin. Velocity looks good. Just waiting for just a little bit more of a breakout. But I do like Bitcoin on the long side. Now we take a look at everything else. It's doing less. Everything is less. So Bitcoin Cash is not even at the 50-day moving average where Bitcoin was. It looks decent, but it's not the best. We want to trade the best. Here's Ethereum. I mean, we're down at the 20-day moving average. I mean, this is just absolutely pathetic that we haven't had any bounce whatsoever. So again, I don't want to mess with that. And look, if you can figure out Litecoin, let me know what it's doing, because it had a great bounce. Bounced way faster than all the rest. And then when the rest were basing, it had a pretty deep pullback. It's a decent chart pattern here. If someone said you can't trade Bitcoin and you have to trade another currency, it would be Litecoin. But here's the thing. I don't have to do that. I can just trade Bitcoin, which has the better setup. All right, Anka, take us through the Forex market.
Absolutely. Well, let's just start with the US dollar. So you can see that this thing is just looks -2 on trend and -3 on velocity. So this is again looking really bearish. I talked about how like earlier in the summer, like, dollar was like not really tradable. It was just going back and forth in the range. And here we are, we're picking that velocity up. And, I think dollar looks a little bit more concerning here. After a big move like this, we could get a little bit bounce, but I think those bounce likely to be shorted as we are now downtrending where we make a lower low and a lower high. Now, on the other hand, the yen, and Rob said earlier, there's a lot of talk about the yen here. Yen's not really doing anything. If you take a look at it, it's just in a holding pattern, what I would say. So if you take a look at dollar yen, yeah, there's a movement in dollar yen, but I think that's mostly coming from that dollar instead of the yen. So yes, the yen hasn't really moved as much. You can see velocity just sideways here. So whenever you get this, this is where it's just building energy. It's not ready to pull the trigger yet. It's not a great long or a short. I think it's just sideways for now. So I know trend score is there, but velocities, I just don't have the big in velocity where I want to jump on. So I will hold on to.
Can I jump here on yen and I want to share with everyone just stories of my youth and stories of the first couple of years of trading. Like personally, I think yen should be weaker. I personally believe that. We've had a very strong move up in equities, and the yen had a monster run. I mean, this is a monster run that you're going to see every 5 years. That was an absolutely insane run. I think we should lose at least half of this run. Now, that's my belief. Now, that belief comes from all these other areas of, maybe I want the yen to be cheaper because I'm traveling there soon. Again, there's all these things that could come into play that is subconscious. So what I would do as a young trader is I would say, well, look, it's going to break. I know it's going to break. I know it is. So why don't I just get in it? Why don't I get in it now? Because I know it's going to break. I think some of our traders are thinking that and being like, let me get in early. Because like I said, I've gotten several emails this week about Rob, short yen. And it's like, look, I agree with you, but it's a terrible trade. So I just wanted to share that because it's something I did as a young trader where I had this very deeply held belief and the chart wasn't showing me what I wanted. So I found ways to minimize the chart. I found ways to make the trade anyway. All right, back to you, Ankit.
No, that's a very good point. And I think as a trader, we always get in this trap once in a while where we start to trade our opinion. And this is why we have a system in place where, we'll trade when, we see in the numbers. But I totally agree. And Swiss franc, it's kind of the same boat, Rob. Like if I had to put a bet on, I would have been like, hey, after this big crazy reversal that we saw in the equity markets, I would expect, Swiss franc, which has been acting as a nice safe haven currency, I would have expected that to fall apart too. And here we are, not falling apart. It's just in a holding pattern. I mean, on the daily chart, we actually went up. So this is again a great example just on the yen where I could give you many reasons why Swiss franc should have been weaker, but it's not. So it's always good to just trade the trend, trade the markets in front of you. Now, if you take a look at the euro, well, now comparing to the Swiss franc euro, it's just not doing much. This is the currency that I would just not want to trade here. There's better things out there that's moving, but as far as the trend score goes, it's just zero. So it's not really a great trade to jump on that would last for a few days. And this is a very short-term trading here. Now, on the other hand, pound, well, that's a better alternative. And that's exactly what we're seeing here. So we're seeing there's sort of this correlation where, we're seeing the outperformance in some and the underperformance in the other. And euro and pound is just a great example where the euro is actually stuck there, where the pound is actually doing well. So I still like pound to the upside. You can see the trend is picking up, the velocity is there. I think there's more room for this one. Comparing to the euro, I think this is a better contender here to the upside. Now, if you take a look at other currencies, well, CAD, you can see that this week was a big week between the CAD and the dollar, where dollar took a big plunge, but CAD did not. So there's a disconnect there this week. So the question is, could it happen next week? Could we see the CAD catch up to the dollar? We absolutely can. I mean, if you look at the trend score, it's a -3. Velocity is not there, but I think trend wise, there's a better chance for that support to give out once it breaks the support area. So nothing really has changed for the CAD here. Now, the biggest surprise, and again, we were going to talk about divergences as well, is the Aussie and the Kiwi. Well, Aussie has made a big recovery. You can see after bottoming it out all the way in August to where we are. That's a massive recovery. So question is, what's a great entry? And I think right now we have the resistance line there. If it breaks above that 50 moving average, I think the Aussie can strengthen it a little bit further. But velocity and trend is there. But if I have to pick one, and I think the Kiwi is the one that would stand out the most. Remember RBNZ surprise rate cut? Well, that was a one-day move, and you can see that where we are. We are almost at that 50 moving average. And if even a week like this, Kiwi is up more than 1%, where Aussie basket is not. So it's kind of giving you that relative strength of weakness. So I really like Kiwi on the long side compared to the Aussie. I like the pound long on the long side compared to the euro. And there's just better alternatives that we have that we're going to focus on through next week. Back to you, Rob.
If we take a look at how everything stacks up, the big trends here, the big moves, we really have two big trends going on. And it's really only on the downside. CAD and dollar are weak. And I agree with you, Ankit. I think CAD is looking absolutely beautiful this week. I like that low base. I like CAD is my number one short on the week, but it's got to break that low base. Yen is the only thing that's at a +2, and it's not even a strong +2. So for me, I'm just not interested in going long yen. I'm just not interested in yen at all. I actually think it's a very, very tricky trade at the moment. That brings me down to the +1s. And this is where I'm going to focus. Bitcoin, pound, and Kiwi long against CAD and dollar short. But remember, this is the longer term trends. What's moving right here, right now? Well, right here, right now, the weakest are the dollar's weak, Swiss franc and euro are weak. They're moving lower, but again, the trends don't match up, so we're going to go ahead and ignore those. Ignore the yen. The CAD, we love it on the trend score, but it needs to break. So that leaves us with basically Bitcoin early in the week, and then pound, Aussie, and Kiwi against dollar. So those are going to be the currency crosses that we focus on at the beginning of the week. And then, of course, with all of our daily videos, we'll update you as this board changes. I'm waiting for that CAD to break. That's going to be my number one trade, but it's not going to be the first part of the week. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? So the pair that I have to look at, well, let's actually pair up our bulls and just see what's the best. Actually, you know what? I'm going to start with Bitcoin first before we jump in, because I actually probably am going to put that on the very, very top of the list as far as early of the week is Bitcoin. As you can see, it's had a nice breakout of this little base that it's been sitting in. It's just a really nice breakout. It's ready to go right here. I mean, it is already ready to go, triggered. I think 68,000 is going to be the target on this one. And if it breaks out above that, it's going to make a run up to the all-time high of 71,000. So to me, Bitcoin looks really good here on the daily chart. If we come down here and we look at it on a 4-hour chart, again, it looks good here. Everything looks like a buy here technically on Bitcoin. And we've been waiting for this moment. Definitely looks like a buy. let's focus on the cryptos. And I said how I want to figure out, what do I like best? Pound, Aussie, or Kiwi best? So what I do is I take a look at a 4-hour chart and I say, okay, if I wanted to buy something right here, and I didn't know if I wanted to go long pound or Aussie, or right now you can see pound had a big move and now it's rolling over. So for me, at this moment, right here, right now, the Aussie is better than the pound. So let me see if the Aussie is better than the Kiwi. And I pull this up and it is not. You can see the Aussie is falling against the Kiwi. So there's no question that Kiwi is the strongest at the moment. Will that hold on? We don't know, but that's what we do with relative strength. We measure what's been the strongest and say, we're going to get into this trade with the hopes that this strength lasts throughout our trade. Beautiful, beautiful. Kiwi dollar. Kiwi dollar high base breakout. Okay, yeah, you probably missed it. We're up at 62.30 at the moment. So that was already a 0.7% move. So for me, that's going to be chasing it a little bit. Now, if you want to go down, maybe a lower time frame, a 1-hour chart, and if you can get a pullback down here to maybe the 62 area, maybe set up a shorter term trade. But for me, like I said, I should already be in this one. I'm not. I'm in another trade at the moment. But for me, this is where I'm going to start looking this next week. Kiwi versus dollar. But that's just what relative strength is telling me right now. But what I'm really looking for is Kiwi CAD. Kiwi CAD is my number one trade on the week. Number one trade on the week. And you can see here, we should have a run all the way up to the 85 area. So we're at 84.20. We're 84.20 at the moment. Sorry, 84.20 at the moment. This is 80 cents. That is just under a 1% move. That hits the target area for me. I don't like to look for things less than 0.5%. Everything to me is saying this thing's an entry right here, right now. So 84.18, nice breakout. Do your position management after it. This one looks great right here, right now. Ankit, what do you want to take a look at?
Well, the first one I like to take a look at is the Aussie Kiwi. Again, kind of going after that relative strength of weakness. You can see that this thing, and I love these pairs because when they do trend for a lot longer. And you can see that this thing, any little bounce is just shorting over. And now going into next week, we also have the CPI numbers coming out of the Australia, which again, they're expecting a lower number. I don't think inflation is the problem here. So if we go kind of going with that perspective, I think this definitely can continue to go in that direction. So I really like this Aussie Kiwi. Just if I want to avoid the yen, I want to avoid the dollar because it had a huge move already. I think next week I'd like to live outside of those major pairs because there could be some bigger retracements too. But I think I want to focus on things that are moving consistently in one direction. So Aussie Kiwi is the first one. On a 4-hour chart, you can see beautiful bases that are shorting into, and they're guiding with the sloping EMA and RSI. Yeah, everything pointing out to the downside. So I like this. Depending on how long you want to hold that trade for, I think between 4 hours, even to a daily chart, it actually still looks pretty good here. As far as the risk to reward goes, it's sitting at 109. I think it can easily get towards that 107.50 area without much hurdle there. So, as you can see that in the past, when these runs happen, they do tend to go a lot longer than what you anticipate. So, the other one, Rob, we'll take a look at is the Euro Pound. Just the same idea, relative strength of weakness. You can see how unwinding happening with that big move that happened at the end of August or July, early August. It's unwinding that. I think this one still has a more area to go down to maybe 84. So there's still more downside risk there. So I think this relative strength of weakness likely to play out going to next week. And a lot of these dollar moves, they are range bound. They like dollar yen. Rob, if you want to pull that up, I had a lot of questions on the dollar yen along the same lines. Is the dollar yen a great next short? And you can see that this thing is trading quite a bit of range here, and that's what I want to use everyone to kind of use some caution here. Is where we are. catching the move, you're looking at about 200 to 300 pip range. Sometimes, that could be a little difficult. This is, I think, more of a dollar weakness right now. But yeah, something to keep an eye on. I like it on the chart. I just don't love going long the yen here. So I think there's better alternatives out there. And going to next week, that's what maybe we can focus on. It's the better alternative. So that's my game plan here, Rob.
Both Uncle and I think that the equity markets stay strong, the risk-on market stays strong. I don't think we're going to break out and run to new highs in the last week of August. I think we got to get into September when people are off vacation and it's a little bit more serious. So I do think we're going to see a little consolidation here, staying strong but not really running anywhere. And that means lower volatility, which usually bleeds into all asset classes. I could be wrong, but I think you want to be trading less this week, not more. And then the week after that, I think, is a good time to start looking to get a little bit more active. Well, that is it for the Currency Room. Thanks for joining us. Have a great weekend. Goodbye, everybody.